ongoing U.S.-Iran war has triggered the largest cumulative oil supply disruption since the 1979 Iranian Revolution, with the world losing an estimated 2.6 billion barrels of oil since the conflict began. Saudi Aramco estimates that this loss is equivalent to roughly 25 days of global oil consumption at pre-war levels. The disruption is particularly significant in the Gulf, where daily supply has fallen by around 11 million barrels. However, analysts estimate the actual gap required to balance global demand is about 5 million barrels per day. That gap could widen further following recent drone strikes on the Kazakh CPC pipeline, adding another potential source of pressure to global supplies. The biggest concern now is how long emergency reserves can compensate for the disruption. The International Energy Agency holds around 1.5 billion barrels across government and commercial stocks. On paper, that could cover a 5 million barrel per day supply gap for approximately 300 days. But there is an important limitation. The IEA cannot force commercial stocks to be released. As a result, only around 0.9 billion barrels held by governments are considered genuinely available. That reduces the effective emergency buffer to approximately 180 days if the current supply gap continues. The United States is facing its own serious reserve constraints. The Strategic Petroleum Reserve has fallen to its lowest level since 1983. The Government Accountability Office has also warned that deteriorating infrastructure could prevent roughly 25% of the reserve from being released. That represents more than 100 million barrels. If only about 200 million barrels are accessible, the United States could theoretically cover the current estimated global supply gap for just 40 days. This highlights how the physical availability of reserves can be just as important as the headline volume stored underground. The pressure is also extending beyond crude oil. Diesel and jet fuel supplies are currently at the bottom of their 5-year range. The shortage has been linked to war-related damage affecting refineries in Russia and the Middle East. This creates another vulnerability because crude oil reserves alone cannot immediately solve shortages of specific refined fuels. Meanwhile, total global oil stocks fell to 7.9 billion barrels in July 2026. China stands out as an exception. Estimates put its oil reserves between 1.0 and 1.7 billion barrels, potentially allowing the country to sustain imports through the Strait of Hormuz for nearly a year. That gives China a significantly stronger buffer than other major economies. Overall, the depletion of global inventories has reduced the protection available against further supply shocks. With a 5 million barrel per day gap, constrained emergency reserves, and weak diesel and jet fuel stocks, the market is increasingly vulnerable to sharp price increases if the disruption persists.